All right, we'll try that. See if the first person pops in here can give me a thumbs up on the volume. See if we can see if we got it this time. Let folks get back in the group. One of these days we'll figure out the audio. We good to go, John? Give me a thumbs up. Awesome. I didn't even change a thing, man. I don't understand. Maybe that's why Apple stock is going down. I have no idea. No, we were actually talking about what to do with Apple right here. Actually, that was kind of an interesting discussion I had. Actually, Bob's talking about it, so let these guys get back in here. That's really funny. I didn't change a thing in the settings, so I don't know what's going on. But good evening to everybody. I'm going to wait just a bit, let everybody get back into the group. You guys can see you made the wall of fame here if you're in the group. I actually apologize. Mystery Queen is one of the most loyal subscribers I've got, actually. So, but yeah, I don't know. All you can really do. This stock market's really, I think we're probably getting to the end of the calm before the storm, before the holiday season kicks in. But man alive, it's been a rough month and a half, no doubt about it. So let you guys get back in the group and let everything reload. I do apologize. Like, it's really funny. I didn't change a thing with the settings. So I don't know. Computers are unbelievable. I showed up to work today, and every time I moved the mouse, it would freeze up on me. So that's the world we live in, I guess. That's what we've got to work with. I got Lee Nguyen in the group. I got John in the group, who I knew was not the thumbs down culprit last year. I don't really care. The thing about it is Scribner and I met the Jordan from the Millionaire Millennial. He does Amazon affiliate marketing. I don't know a whole lot about it, but evidently he's very successful at it. Runs a pretty successful YouTube channel. He'll be one of the guys that I actually thank on my 10,000 subscriber video. I'm working on it now. I've started compiling some data from the history of the channel, going back a couple years. So that'll be really, really fun. So you guys that are kind of getting in here and new to the group, or you're new to the channel, or if you've been with the channel a while, you guys need to keep your eyes open for that 10,000 subscriber video. So it's certainly going to be pushed back with regard to my appreciation on so many people that have helped me. I really kind of feel bad a little bit. I don't get to watch other channels as much as I'd like to. I do run a full-time job, which does prohibit some of my time, actually. I've got Robert LaPointe. Welcome to you. Good evening. Big A, Great and Hard, Christian Vieros, Yo Mama. That's right. In the house. I got Bill Williams in the group. NM Munch. I hope that's right. I hope that I'm saying that, guys. It looks like by your thumbnail, you guys are happy together. That's for sure. You guys are really, really close in your thumbnail. So it looks like you guys are happy. So you decided to tune into the Independent Investor channel for a Friday. So I do welcome everybody who's making their way in the group. And I really have a rhetorical question to kind of throw out there. Through the history of the channel, I've talked all the time about how a lot of people spoke about investing, especially on the YouTube landscape, about how easy it was. You guys think it's easy now? It can be very humbling, and that's exactly what I meant. I've went through this many, many times before. And I know Bill was hitting me up and asking me about the position. I'm pretty sure it was Bill. I think it was one of you guys in the group talking about taking a little bit of haircut in Apple stock. And be rest assured, you guys have one of the most quality companies that you're taking into a downturn. I actually think it's kind of found its base here at 190. But there's a lot of stocks right now that are really, really getting cranky. And I don't know if it's a combination of sector rotations. If you guys understand my portfolio and kind of how I've crafted it, I do have some stocks in the portfolio that are really taking a haircut right now, but other sectors are really benefiting in a big, big way. So you guys need to throw those in the group here. I actually think the number one sector right now is energy. I think it really looks favorable. Down 20%. Some of these names, they're making killer money. Just kind of try to stay away from some of the debt and some of the majors. I own them all. I don't even care. I own them for their slow capital appreciation, but specifically for their dividend. But I think energy right here is working. I think financials is not working. However, if you're new to the stock market and you're looking to get some financial exposure, I like financials right here. So I've got Brent in the line here with the Financial Investor channel. So if you guys actually have questions, you can shoot it down. I've got Gwendolyn Sunrise in the group. 1979 just tipped me $4.99. That is awesome. I really appreciate that. Thank you. Just goes to support the channel, guys. And I really love, this is my favorite topic, honestly. I love talking finances with you guys. I love interacting and kind of bouncing ideas off of you guys, because I think investing works better that way as a community. You guys can come in here and say, you know, what's going on with technology? And as Brent alluded to there at the bottom, you know, he's talking about a big sector rotation. I think that could be a partial. I think that could be right. I think there's a little bit structurally going on. I think the ripple that Amazon presented in their earnings kind of sent a little bit of a ripple through the stock market, certainly. So something there to be paying attention to. I'm taking a pretty big haircut. I'm a little bit worried with Adobe, quite a good company, but I own Adobe and CRM Salesforce at the same time. Microsoft is holding up well here. I've got Christian in the line here. He's asking me what my take on Tesla is. Tesla's interesting, guys, and you need to kind of understand my perspective on Tesla. You know, with all of these, you know, just remember last month how beloved a company like NVIDIA was. Okay, the highest growth chip maker in the business. They're still doing exciting things as of today, but they've dropped 50% in their value. I'm not really sure why Tesla gets so much of a pass. I actually like some of the things I've actually heard. Okay, the last quarter they actually turned a little bit of a profit. That's intriguing. The SpaceX project, even though that segment of the business, from my understanding, is private, the scheduled FAA clearance for a lot of the satellites that are being sent up just got approved actually today. So it's interesting that you mentioned Tesla. I think Elon Musk has actually calmed down a little bit in in the comments, and I think he does understand a little bit. I think part of him doesn't care, but I think the part of him that does care is projecting that a little bit better and understanding that whether or not he likes it or not, he's got a responsibility, you know, to the folks that own the shares. Now, he hates people who short the stock, obviously, but you know, I don't know, man. It's a tough call on Tesla. Very, very exciting. The technology is amazing. They have such a huge head start, right, on the industry. Are electric cars going to be a thing of the future? And is Tesla going to be able to fend off the competition that is inevitable going forward? I don't currently own the stock here, but there's some interesting things going on right here. I think if you own Tesla right here, I'd be more apt to sell the stock right here than I would to buy the stock, because it's so volatile. If you're interested in chipping away at a stock like Tesla, you could do that, okay? But I would highly recommend keeping it, honestly, in your aggressive growth section of your portfolio, and try not to expose more than 5%. You know, if you had $10,000 to invest, I don't know if I would put more than 2 shares of Tesla in your portfolio if you really want to find some exposure in an aggressive growth stock because you believe in the story. And I think that there's some reason for people to believe. It's just that I've seen enough reason to think that there's a lot about Tesla that is just a belief and not reality. Okay, what I mean by that is folks that are driving around Tesla, okay, it just doesn't drive with perfection everywhere you go, because if you have a problem, they have problems with their customer service, they have problems with their charging stations. I saw this firsthand when I was down in Florida, and I don't know if Lydia can talk about, what's going on in Southern California, because I can only presume that it's the same problems with crowding at the charging stations and things like that. So I would just be careful. I would pick it up on the downturn, maybe a share at a time. If you guys are investing in M1 Finance, that allows you that opportunity to kind of scale into Tesla if that's what you want. I know it here with all of these angels basically falling from the sky, Nvidia being the latest one to fall really hard. I mean, Netflix is really the last one standing, to be honest with you. And I just worry about jumping into, seeking growth right here in the stock market. Let some of these value plays work for you guys. But my first rhetorical question, honestly, to the group is, is investing easy? And don't ever slip up and get complacent on the stock market by saying that it's easy, because man, it's nothing but that. There's a lot to love about the stock market. There's a lot to love, but it's times like these, you can't just love it when it's up. You've got to love it when it acts like the stock market and it does go down as well. So I've got Alan Kane, who says he's had 200 in Tesla. Now he's halved his position to 100. If I had kept the 200, I'd be better than with most other stocks I have. It's just an aggressive growth, and you've got to be able to weather those swings in the stock. And if you can do that, if you've got the tolerance to hold a stock like a Tesla, then you should work out fine over time. But for a new investor, it's really difficult for me to make the case for putting a sizable allocation in Tesla, and that's why I would cap it. If you really want to own the shares, go ahead and do so. If you had $1,000 and you really wanted to invest in the shares, start accumulating partial shares. All right, because if I did own the stock right here, I'd be selling it. I'd be out of it. Because there's so much more value being created in some of these stocks that I've got earmarked for you guys. I'm going to kind of let you know, because if you're paying attention to the stock market, there's there's a lot of sectors that are working right now in the face of the technology downturn, and some of the high flying stocks as well that are really adjusting back a little bit. So I'm going to scroll up here and try to hit some of these, man. Thank you for that comment, Alan. I really appreciate it. He says Musk scared me with those tweets. Yeah, I've spent money on presidential tweets this year, so I can relate to that big time. It wasn't with Tesla, it was with Amazon. But I had a tweet that cost me about $600 investing in Amazon. So I feel your pain. I really do. Let me scroll up to the top here, guys, and see if I can't scroll through here and get some of these. Again, I've got Gwendolyn Sunrise. I will get to your question. I saw it hit the group there. I'm big on Southern Company. So that might be my next utility that I add to the mix here. I'm starting to get a little bit more exposed to utilities than normal. You guys know I've got a pretty sizable position in Dominion Energy. That's a good one. I do own the utilities Spider ETF from Vanguard. So that helps me get some diversified exposure to the utility sector. I've got, I don't know, about 30 shares, I guess, of that ETF, and it's done nothing. It's finally clawing its way back and getting me back into some positive territory, which is good. But no other utilities do I own right now. Some materials names that I'm actually very excited about. Dow DuPont is a really good one. I really like that name. And then there's also the German chemical company that I'm actually looking at as well. I think I threw that stock pick in the discussion here. But I just want to welcome everybody. I appreciate you coming in and talking about this. Money is one of those things that I think really an individual can really benefit from, a group discussion. And I'm not talking about group think. I'm talking about, different ideas and perspectives as to what people are doing, what people are looking at right now in the stock market. I think this is probably, we're coming into next week being historically a gangbuster week. It's historically very, very good with both Black Friday and Cyber Monday. And I do look for retailers to do well as long as the consumer comes through next week. But we do have some tailwind for sure coming into next week. So hopefully things shake out a little bit and start to reward investors, because I honestly feel like the last month and a half, if you've weathered this storm, I tip my hat to you. I really do, because it's been rough on investors. It really has. There's been a few bright spots in the stock market over the last month and a half. And it's some of those stocks that you just, man, I love owning stocks like Procter and Gamble, Pepsi. They'll lay in the weeds for the entire time while the market is outpacing. And then it's times like these where you're getting paid that dividend, your dividend reinvesting. The stock is giving you some capital appreciation, so some of those defensive stocks. And it just goes to show how important it is to be diversified in your approach. So Brent says it's just a sector rotation. Utility, energy, healthcare, consumer seem to be on the top. I do agree with that. I've got some specific names to offer to you guys along those lines that Brent is kind of talking about. And it's really important that you pay attention to, not that the stocks are going down in the technology, but to pay attention to some of the other sectors that are actually working right now. So Michael Raver says, GE, anyone? I actually bought more General Electric this week. I did. I'm happy to do so. I'm going to continue to monitor it, and I'm going to buy it on the way down. It's being oversold right now. Honestly, there's no real, for the risk comes the reward. Okay. And there's a significant amount of risk out there with buying the stock right now. It really is. Okay. So what do you do? All right. Do you stay away from the stock? That may be the most prudent move for a beginning investor. Okay. For me, it makes total sense. All right. It makes total sense for me to basically average down on the position. I actually foresee the CEO turning the company around. I was encouraged by what I've read, what I've studied about them, trimming back on the non-profitable portions of the business and actually exploiting the portions of the business that are actually quite good. They have fantastic reputations. They have a backlog of products, which is actually part of the reason why I bought more this week. A backlog of products, guys, is just like how Boeing operates. It's the same idea. That's money in the bank. Okay. But the stock is probably just about as hated as any other stock that I have ever seen on Wall Street. And I'm an opportunistic investor. I'm not crazy. Okay. I'm not taking a $10,000 stake and putting it on General Electric. I think I picked up maybe 30 or 40 shares more to my existing position. I think I've pushed my position base up to around 258 or so shares in General Electric. I'm long the shares. So that's my thought on it. I don't recommend that everybody in the group go out and purchase General Electric next week. I don't. I think if you are interested in buying the stock, you may actually get it at $5 or $6. I could be completely wrong on that. Okay. I don't think it's going to let you sit there and think about it for the next year. I think there's going to be institutional buyers that step in and pick up General Electric on the cheap. Okay. So that's my thoughts on General Electric. Certainly a lot more best of breed, especially in the industrial sector. I do own 3M. I do own United Technologies, which are some of those best of breed stocks. Certainly if you were interested in ever picking up Caterpillar looks attractive here at about $129 a share, I guess is what it settled out. It went up a couple bits today, but Caterpillar is attractive right here in the industrial space. A lot of others as well that I like right here, but not really getting overzealous with buying stock right here. I'm going to ride this out through the holiday season, and I'm going to reassess in January with one of my primary goals of defensive strategy in January. And I don't know if I'm going to be funding right away as well. I may fund the account and not buy. But I'm not going to be in too big of a hurry to throw 11,000 more at this market, which is typically what I do in January when I fund the Roths. I may take a little bit more strategic approach this year and look to strategically buy the market next year, because I think we're going to have some volatile opportunities to buy the dips next year. So that's kind of my plan, but I'm not going to do anything crazy before Thanksgiving and holiday, and let seasonality kind of work for us a little bit here. So I've got AVA. When I look at my portfolio, I see the flight to safety dividend payers in the green and my high flyer growth stocks feeling the pain. So honestly, your stock picks are behaving exactly the way that you told them to, and this is a good lesson for you. You're not hurt at all, okay? And this is what I talk about all the time. When you're looking at your screen and you see red in your portfolio, a lot of new investors, they're like, man, you start to second guess. Am I doing the right thing? Am I cut out for this? I bought this stock and it went down because of me. I do that for fun. I'm like, oh, great. I invested in Facebook at the absolute wrong time, and here we go. The perfectly good jewel of a company is now going in the toilet. But, you go through those deliberations, and honestly, those lessons will make you stronger, and you will really sharpen your decision making on how you strategically approach your decisions going forward. It's amazing how those decisions that you've made in the past can really help you in deliberating on your future decisions. They really can, and that's the experience piece that I offer as being so, so important, and you're not going to gain that experience. And I think you're going to find that you're making that assessment and you're putting it out there bravely in the group, honestly, for my comment, and I really like that courage. I really do. It's hard for somebody to come on and say, wow, I made the decision over here to buy some value, but I also put some growth in my portfolio. I think you're going to validate for yourself over time that both of those moves were a good move. It's just that anytime you look at a portfolio at a specific given time, you're not going to always have 100% validation as to why you're doing what you're doing. And I got into a back and forth a little bit on one of the videos that I put out where I said that making money shouldn't be your primary goal. And I mean that wholeheartedly, because I speak with new investors all the time who fall victim to this very line of thinking, okay? I invested in a growth stock. Let's say I invested in Tesla, and I sit there and I watch it, and it's like, oh my goodness, Tesla's down $20 today. I'm losing money. Oh my goodness, tomorrow it'll be better. It'll go back up again. And you look at it the next day and there's a regulatory hurdle that they can't pass, or there's some sort of, the SEC is coming down on them, right? And it goes down $40 this time, and it's like, oh my goodness, this is just not working out, man. I'm not meeting my goals, and it's only been 2 days. You know what I mean? And all too often I find that people take that short line of thinking, and the subscribers to the channel really hit me up, and I think it was an honest discussion. I really do. They were like, well, why in the hell do you invest then, Ryan? That's stupid. You're investing to make money. And I will say something to the group, and hopefully you guys can resonate with this benefit. The less I think about money, the more I make. Okay? Why? It's because my strategic plan is focused on my plan and how I can continue to build my plan. I may not focus on stocks, which I haven't really focused too much on buying and accumulating a lot of stock. I'm not being aggressive now on the stock market. Why? Because the volatility has peaked. And unless I can find some value in the stock market, I'm going to focus on other things, right? I'm going to focus on building savings, which is exactly what I'm doing right now. It's a defensive strategy. It costs me nothing to do, right? And that's what a lot of people don't understand is, a lot of people are like, okay, I'm going to invest in the stock market. And the worst thing that can happen is that they want to invest in the stock market and they want to make money immediately. And they do. That's some of the worst thing that can happen to you, because you'll make that money and you're like, oh my goodness, this is awesome. I'm going to quit my job, man. I'm the best stock investor ever. This is amazing. You start telling all your friends about it. You know, I invested in this stock, man. It went up 20%. It's going to go up and make me rich. I don't have to work anymore, you know? And my point was really simple, that if you're approaching the stock market in a deliberate, fashion, you're gonna make mistakes and you're gonna have reductions in stock price. But if your goals are long term, you're gonna end up making money a primary goal. All right. Now, that was a really, really good discussion that I had. So, for what it's worth, that's just a piece of my insight for you guys. I focus not on the making money over the short term. It just doesn't make sense to me. And it didn't make sense to them that they would sit across and listen to a video where I'm saying your primary goal cannot be making money. And it just didn't make sense to them at all. And hopefully my explanation back to them gave a little bit more clarity, that I didn't say that making money is bad. I didn't say that you won't make money in the stock market. I didn't say that either. I said if your primary goal is to enter the stock market with the sheer goal of making money, you're probably going to be disappointed. All right. So let me scroll down here again. Thank you for that, ABA. That was pretty cool. What's your view on Snap? Well, I mean, obviously the best social media play right now is Twitter. I mean, I think Google, I think YouTube is a fantastic platform. I think it's a wonderful property that's owned by Google. Google is just getting drugged down with everything else, unfortunately. You guys notice the real bright spot in technology is actually Microsoft. If you guys took a position in Cisco, I know I mentioned that as an option. Cisco had a banging quarter. So a lot of the value, Intel, of course, is coming off a very good quarter as well. So I think Snap could be in real trouble here. For the millennial crowd that uses it, honestly, I would rather invest in Facebook for Instagram. And that's a lot of the reason that really keeps me in the stock. I'm not worried one bit about Facebook, okay? These fears, from what I understand, are real, okay? But how real are they, honestly? I mean, is the stock going to go to zero? I mean, this company is generating cash flow like no tomorrow. Instagram is a fantastic property, and I would love nothing more for them to spin off Instagram from their core Facebook and give me free shares of Instagram, man. I will be buying more if Instagram ever becomes its own publicly traded, a portion of, or a spinoff. And if you guys don't know what a spinoff is, when you own a stock of a company like a Kraft Heinz Food when they spun off Mondelez, ConocoPhillips when they spun off Phillips 66, you'll be given free shares of the stock. eBay, for example, when they spun off PayPal, you'll be awarded free shares of the stock, and it's a cool feeling. Spinoffs are one of the coolest things ever in the stock market. There's a lot of big companies that I recommend through the channel to take a look at that own multiple properties within their businesses. Johnson & Johnson is a great example in that they've got exposure to a ton of different businesses out there. So when you buy Johnson & Johnson, a lot of people look at it and they're like, well, it's just one stock. No, it's not. It's exposure to multiple segments. 3M, same idea. So it really kind of got me off on that tangent, but that's the first time I've ever really mentioned spinoffs on the Independent Investor channel, but they're a really, really cool thing. Hey, Ryan, how do you feel about KHC? I feel just as good now than I did before. I wish I had a little bit more opportunity to add more to the position. I think, Josh, if you're looking at taking a position, I like Mondelez and I like Kraft Heinz right here. I like the ratings. I like the business. I like the exposure internationally for KHC. But guys, this is a powerhouse of a company. It really is. Pay a nice dividend. I consider it a nice piece of exposure, one of the best of breed in that particular sector. So if you're looking for some exposure rank those in order, and KHC should be right there at the top. I like the stock right now. I'm long it, so I don't really care where it is right now. If I do have the opportunity and I sell out of another position, I may roll some funds into KHC, because right here, it seems like it's settling out in the low 50s. Who knows? I've been very, very disappointed in the stock performance this year. It's been a dog. It's been one of my fallen angels, no doubt about it. I'll wait it out. Stock will double from here eventually over time. What is it going to take? A year? Is it going to take 6 months? Is it going to take 5 years? I don't know. I don't I don't imply to know where a stock is going to go, but looking at it right here in the 50s, looks very, very attractive. I like KHC. Thank you, Josh, for that offering. I do own Mondelez as well. I think I try to give you guys an exact share accumulation of KHC. I think I'm 50 shares of KHC and 100 shares of Mondelez right here. Mondelez has performed quite nicely, so go figure. Performing very, very nicely for its international exposure piece to their business. I've got lean win on 401k. How can you tell how much each fund's price is? So I just did a review in the Facebook group for a very good friend of mine who asked me this very question. And if you guys remember that scene in Wall Street when Michael Douglas is talking to Charlie Sheen and he says, "Put me in the dog that has the least amount of fleas." That's what I commented on the Facebook group, because the expenses were pretty high. But it's pretty simple. You just pull the disclosure, and what I typically do, because in this disclosure, of course, they didn't give the expense ratio right next to it, but you just input the ticker symbol, and it's typically going to be not a 3-digit ticker symbol. It'll be a 5-digit ticker symbol, and you're just going to want to put that into your brokerage, and it'll come up, and you want to pay attention to the expense ratio and make sure that you understand if it's a front-loaded type of situation. But yeah, the expense ratio is what you're looking at there. And unfortunately, your hands are kind of tied with 401ks. That's why I'm not crazy about them. Okay, it's like a lesser of an evil. If you're offered a 401k, and especially if you're offered matching, it's a good, sound way of building a base. Okay. And the independent investor channel can kind of be that additional tip of the iceberg to your foundation, where you can start that additional tax protected account and add some surplus money to that account. Or if you're max funding your 401k, I know a lot of the maximums. I don't know if it's increased to 19,000 this year, but 18,000, that's a lot to come out of a paycheck for a lot of people. But for a lot of people, if they're doing the maximum, typically they'll cap what it is they'll match you when you're contributing your dollars every month. And typically you don't have to max fund a 401k to get the maximum match. They'll cap it typically around 5% or 8%, whatever that is. And I always recommend looking at trying to work up to that maximum match. And then if you don't have the surplus money, or you need to render more out of your paycheck, you can go ahead and do that and not sweat it. You don't want to be, struggling month to month to maximum fund your 401k. Furthermore, it does give you that opportunity to start that additional count and take some of that surplus money, even if it's $25 or $50 or $100 a month, and roll it into that other account where you have more freedom. But in the 401k specifically, man, you just want to look at that expense ratio within there, and that'll kind of tell you. And what is a good expense ratio? A good expense ratio, I would say, is a tenth of a basis point and below. So 0.10 of expense or below. This particular account had expenses above 1 basis point. So 1.25, 1.37, 1.57, 1.67. Those are actual expenses in this account, which I thought was pretty expensive in my review. And the cheapest one, I think, was 0.59, and it was an S&P 500 account, the same one that we recommend. It's the exact same account in the VOO or the SPY or the IVV, right? that are the ETF variety, be offered through the 401k. This had an expense over time of 0.59, and over time, that's going to cost you a lot of money. A lot. People really lose track of how much that'll actually cost over time. But a financial investor right below, I want to get to Brent. Tesla's still on the up. They mostly sail now, but as more vehicles are out there, their service parts will blow up after warranty. Yeah, and that's why I think a lot of it is just it's a great idea. But I don't invest in ideas like that haven't come to a reality. And I'm not saying that Tesla won't be something in the future, but I'm pretty glad that Brent is backing me up on that one, man. I don't know. I could be completely wrong. Hell, he could be wrong. Tesla could double from here, and then we'll both be wrong. You know what I mean? But I don't know if it's one of those situations that is worth saying, hey, you're wrong or right. I have to make the best decision on what I see right now in what the company brings to the table. And just telling you guys, yeah, hey, I invested $10,000 in Tesla to my community. No way. I have way too much respect for how much respect you guys have for my opinion. And you guys know how I feel about the stock. I was encouraged that they made money on the last quarter. That's a good thing. I think the cars are really, really nice. I really do. Most everybody that I've spoken to who own a Tesla or have driven one say they're amazing. They're quite amazing. So from a product perspective, great. And who's to say that somebody doesn't just swoop in and buy Tesla? That could be the greatest thing that ever happens for that company, is somebody that's actually solvent just swoops in and just buys the entire idea. Is Elon Musk going to go for something like that? I think not, but I think that could be the best thing for it, is to actually just pump so much liquidity into that company that they have no other alternative but to succeed, because that's their big problem right now is liquidity. But if they can stand on their own, I think they have $7 billion, I think, in debt notes that are coming due next spring. And if they're making money now, they should be able to meet some of that debt obligation that they've got coming due next spring. But that's just my feeling. I know it's an interesting stock to talk about. It's fun to watch, honestly, but I'm not interested in investing in the company right here, no doubt about it. So I've got Jerry Welch in the group here. How far do you chase a stock down? I chase down Ford, Newell Brands, and now NVIDIA. Yeah. That's a really good question. Typically, the rule of thumb is not to chase a stock down. That's the rule of thumb. It really is. However, if you never try to average down in a position that you do believe in, and General Electric is one that I do believe in. I really do. I think all of these. Looking at General Electric through this prism right now will eventually be good for the stock, right? I just think, owning the stock at $60 or $42 just a couple years ago, all this corruption within GE was going on at that time. So did it make it right to own it then? And now somehow, when all that's been exposed and they're actually being forced to go in and fix these problems, is it not prudent to buy the stock here at $8? You could argue on both sides of the fence, I think, but you make a great point. And the rule of thumb, never try to catch a falling knife in the stock market, typically doesn't work out for you. And that's why I say all the time, if you guys are a new investor and you've got less than $10,000 of capital, you guys should be taking the easy road, the autopilot road, right? You should be attaching your barometer to the stock market and just buying the total stock market index. If you wanted to buy, the S&P 500, you can do that. But those are two very, very sound options. Then you don't have to worry about it. You own NVIDIA, you own Ford, and you own Newell Brands within your S&P 500 fund. Or you go ahead and just buy the total index fund. You can do that. Buy a nice ETF that gives you broad-based exposure, and then you can come on independent investor channel and kick down or throw down in the community here, and just have a little bit of fun with it. But single stock ownership is not for everybody. And it's interesting because, Newell Brands is a buy right here. So I don't know when you entered the stock, but I would absolutely hold Newell Brands. Ford, I would hold as well. NVIDIA, I wouldn't do anything with NVIDIA right here either. There's still, I think all three of those are good companies. But you're looking at the stock market with regard to those three stock picks right now, and you're saying things suck. What should I do, Ryan? Things suck. And I think if you just take a step back and say, hold on a second now, I entered into NVIDIA because it was going up every day. Well, you may have entered into NVIDIA because it's the best chip maker in the business. Their video game exposure, their artificial intelligence, their CEO, their management team, their ability to make free cash flow. Unfortunately, you invested in the company when the chip stocks were probably taking a leg down, right? And you have your option to hold NVIDIA right here. That's exactly what I would do. That's exactly what I would do with all of those stocks. Would I buy more of them? No, I wouldn't. Depending on how those positions are related to your total overall holdings, right? See, I can take a little more risk on General Electric because I have a sizable portfolio that allows me to do that. Now, it doesn't mean I'm stupid with my money. It doesn't mean that I just shift thousands and thousands of dollars around all the time. It doesn't. I've taken one strategic buy down in General Electric. I've taken two now, actually. I bought it at 18. I took my first buy at 13. And this last one, I just took around $8 a share. In my mind, that makes perfect, prudent sense. But for a lot of investors out there, if you're the only one, if General Electric is the only share that you have in your portfolio, hold the shares and look somewhere else. Okay? Don't try to make a poor situation better by doubling down on it, or putting an extravagant amount of cash toward that bad position. If you want to strategically buy it, go ahead and do that. But don't be surprised when the stock continues to go down. If I bought the stock at 8 because I think it's bottomed, okay? If it goes to $5 or $6, I'm going to buy more, okay? And that's just based on the fact that it's still an $80 billion company. They've got a huge backlog, and I do believe in the CEO. Right, wrong, or indifferent, therein lies the beauty of investing. So we're very, very good stuff. Gary or Jerry, I hope I'm pronouncing that right. Thank you for the question. That was really, really good. I've got Kang Zhang. What about Disney? Disney's one of those stocks that I've got on my list of stocks that's actually performing quite good. Disney's a buy. Disney's one of those stocks that you can buy and own forever. So for you guys Disney is one of those stocks that as an investor, if I didn't have it in my portfolio, I would feel less of an investor. That's how highly I think of the properties in Disney. I think their cruise business is fantastic. I think their amusement parks business is fantastic. I think their entertainment business is second to none. And I'm partial to Star Wars. I was born in 1977, the year of Star Wars. So I'm partial to it. Now, I'm just kidding. I'm not kidding about that. And that's no reason to invest in the stock other than the fact that I think the Star Wars franchise is actually quite valuable. And it is actually a fantastic reason to invest in the company. That's just an awesome product that they own, an awesome property that they own, along with DreamWorks, some of the things that they've done. I know they bought BAM Tech, a couple owner shares in BAM Tech over the last couple years in Disney. The stock really hasn't moved a whole lot. I know it's been in between the low 90s. Here it is just approaching 120 a share. But Disney's one of those stocks that'll pay you back over time. And it's paying shareholders back right now when all the attention is on everything else in the stock market. Disney is one of those that if you were going to buy 5 stocks and just sit on 5 stocks with a passive base in a portfolio, Disney is one of those stocks that you could invest in and just own for the long term. That's a cool question. Thank you. I've got Gwendolyn Sunrise right below. I know I make too much for the Roth IRA, so how do I tax protect while self-directed investing? That is an awesome question. So the majority of the audience obviously makes less than 130,000. I'm one of them. And certainly reducing some of your taxable income is probably in your best interest. There is an option for you, and I forget what it is. I'll have to get that for you, but I got that question a couple of years ago. But this question right here, I will carry over to the Facebook group. And I know I've probably got one of my administrators in the group right now that is picking up on that question. And I want to take that one for action. That's a really, really good question, because obviously your tax accountant is probably going to be your best source for that type of information. I've looked into this as well for folks who take on inheritance, etc., things like that. But I'd be interested to know if you have dealings with your tax accountant, what those recommendations are. I do have a few ideas, and I know there is a very, very little known option for income earners over that 130,000, even over the 120, because I know the contribution limit is very, very capped up to that 130, and then you're ineligible above the 130 level. So I want to shelf that question, and I'm going to earmark it for action in the Facebook group. So if you're not part of that group, please kick over there, and I want to take that, and I want some other input from a couple folks. They know who they are. They're administrators in my group, and they can take that, and we can talk about that, because there is an option for you. And I just don't have it right now off the top of my head, because I did research this topic it was about a year and a half ago, and it was for a family member that I was looking at that question for. So thank you for that. But I want to shelf that for now, and I will get on that after this live feed when we kick this question over. So Ernest, if you've got that question, man, I'll push it out to you for action. And Jared and Ernest, man, those are my go-to guys for those technical questions as they come up in the group. That was very sincere. Thank you. Very cool. Because I know when you make that higher than average, earnings, I don't know if you're making, business earnings, or if you're making it through employment through some sort of a salary with a company. Right, your strategy can change depending on the answer to that. So I look forward to a further conversation with you specifically in the Facebook group. Thank you so much for that question. That was awesome. And I can't wait to refresh because I know I've got something for you that's very, very little known. It's not very known at all. So I will kick that over to the Facebook group. Lydia Santiago says she's back. I don't know if she ever left. She's probably mad at me because I came out with my mime video to start. So again, hello to you. My condolences to California right now. Is just one of the worst things I've ever seen. Honestly, it's very terrible. I can't believe that stuff like that can happen. But certainly my condolences go out to California and all that they're going through right now. Pretty terrible situation. And it's just complete devastation out there in what they're going through. Just really, it's amazing. And it goes to prove how, sensitive things are. And here we are talking this evening about, stocks and betterment of ourselves and things like that. And that's going on. But it's really cool to see you. Hope to see you do a live feed tonight. You got to keep the discussion going and burning the midnight oil. Actually, it's burning the midnight oil for me. You're on West Coast time, so you're good there. So good stuff. I've got Becky in the group, so good to see you. FI again here. Compare Tesla to Lithia instead of just another Ford GM. Eventually, they will be their own dealership. That's a good point. That could very well happen. It's just, man, the autos are just crushed. Autos are crushed. Financials are crushed. Some of these sectors right here, it's just scary to think of them in a bad economy, because things have been so good And it's amazing that these companies just can't get the heck out of their own way. You know, it's amazing. My name is on the board. Yes, yes, it is. I try to get as many as I can in the group here, but I just want to thank you guys for coming in. I will go to some of the stocks in the portfolio now that are working. I'll just kind of give them to you rapid fire so you guys can kind of understand where some of the bright spots are. I'm holding these positions. I'm very, very tempted to take profit off of the table and allow some of the losing positions to work. That's not necessarily the best, most sound advice. You know, McDonald's has just been on fire for me. But some of these other names, and I've recommended Verizon through the channel many times. There's reasons for that. It's a well-run company, but if you guys, you know, listened and got some of your telecom exposure, your telecom communications exposure in Verizon, Verizon's a 5% dividend payer, and it's looking like it's breaking out of its range as well. It just capped over $60 a share. I think if I look back at the history, I don't think it's capped $60 or surpassed 60 over the last 5 years. So Verizon looking very good. Pepsi is just killing it right now. Pfizer and Merck in the healthcare. I want to give you guys and foreshadow what's going on this week, midweek. I think Wednesday is when Medtronic reports. So you're going to keep your eyes open for that. I'm a big holder of Medtronic. That's the only stock that I own in the healthcare that's a little bit more growth oriented. Give me some exposure to the robotic surgical market in healthcare. So I'm excited about that this week. Look for Medtronic. You're getting a pretty good entry point. I'm down a little bit in the position, but if you were ever interested in taking a position and Medtronic could fit in the portfolio, that's one to really key off on this week, as along with, I think TJ Maxx is reporting this week. I think we've got Lowe's on the agenda as well this week. But Medtronic is the one that I'm most interested in this week coming up. American Tower, I mean, we haven't mentioned the REITs at all. The REITs are just on fire. And real estate is one of those sections of the portfolio that you guys could look as well to get some exposure to. I have Simon Property Group and I have American Tower REIT. American Tower REIT has been on fire. They had a great quarter. The stock took off. It adjusted back, gave it all back in a day. I think it got caught up in some market momentum as it turned back, but it's gained all that back again, and it's looking like American Tower is going to break out. Disney, I've already talked about. Coca-Cola, Procter and Gamble. Good grief! I got in a back and forth with Jeremy on the Financial Education channel. He wanted to beat me up over Procter and Gamble. He's got something against it. He's just a different type of investor, right? As he's looking for, you know, some growth and some value, but he doesn't really resonate with the value plays like I do and see that as a strategic pillar in a good, sound portfolio. But Procter and Gamble's been on fire, secretively and unnoticed. Nobody talks about it. But it's run up from the low 80s here. I believe it's above 90. Wouldn't be surprised to see Procter and Gamble go to 100, and then UTX, right? UTX is a buy right here. Excuse me. UTX and 3M. I don't know what the news was on 3M today, but 3M actually took a really nice leg up today, and that's one of those cornerstones in my portfolio that I really wanted to take advantage of. I got long the stock in 3M, and I'm glad to own it. Boeing is the other one that I want to get exposure to, Lockheed Martin being the final one, but I do own Northrop Grumman, which has just done nothing but take a bath for me in a bad way. It stinks. Yeah, it's been not very kind to me at all. So those are some of the individual stocks that are working. We've already kind of talked about some of the sectors. Now, it doesn't mean that you need to go and just buy the sectors next week, but if you take more of a holistic lesson away from what's going on right now, if you're exclusive technology, you're getting punished. And this is why I don't really recommend going out and just thinking that you can buy sector technology spiders or utilities spiders, or buy a discretionary spider, sector-specific spiders. You really want to buy either the entire market or get exposure through individual stock picking within those sectors to get your exposure, because while some of those other sectors are underperforming, you're going to get some accelerated performance out of some of the sectors that are unloved. Right now, the best opportunity, in my opinion, is in energy. Second is in, it's probably a toss-up for me between healthcare, which has performed really nicely, and financials, which has performed extremely poorly. But if you were looking to take a cornerstone position in a financial, Warren Buffett, I believe, stepped in and bought PNC this week. So that's just another piece of news. This is all coming off the cuff, guys. This is out of the brain. I don't have notes on this stuff, just stuff that I remembered paying attention through the news feed this week. PNC is a good bank. I don't own it. I own Wells Fargo, Citigroup, JP Morgan. I think Goldman Sachs is actually a buy right here. I think you could take advantage of a huge dip for Goldman Sachs. Some of the other financials, you could take a position in, but there's one more, Bank of America. So the valuations are just so ridiculous right now. And it's tough. Financials is really a tough recommendation. It really is. I think there's probably more upside potential in energy because of the whiplash effect. It's come down so quick, a 20% drop in crude. But I think those are probably the sectors that are worth looking at. Obviously, utilities here are worth looking at. Some of the other stocks that have been performing well, discretionary and staples have done okay. So those are some of the sectors, and just to kind of pay attention to how sector rotation works. When certain sectors aren't working, other ones typically are. So I want to get back to the group here. Try to get to all your guys' questions, man. Hit me up, take advantage. It's a really, really good group here tonight. There's a close to 100. It's got 70 people in the group here, so that's very cool, man. Take advantage. If there's something that's really on your mind, throw it my way. I'm really interested to get to Gwendolyn's sunrise question there in the Facebook group, because I think you'll find that you're going to want to broach a topic with your tax accountant there on your question. It's a really good one. Let me kind of scroll down here. I'm good, just glad it's Friday. Amen to that. I don't know, there's something about Friday that makes me feel good. I get up very early and work pretty hard during the week. So come around to Friday, this is actually kind of my therapy session. So thank you guys. I hope you don't send me a bill. So the therapy's free of charge. So kind of cool. Let me cruise down here. Lydia, waiting on your video. Keep up the good work. And Lydia's doing daily uploads, man. That's pretty awesome. And my understanding is she does this as a side hustle, just like me as well. So my hat's off to you. Honestly, it's cool to hear, excuse me, perspective of the stock market from a lot of different places. And I know there's YouTubers out there that I don't typically endorse or relate with their message, and that's okay. I'm entitled to disagree with that, but I think it's pretty cool that you're representing the female community, because I tell you what, everybody should have just as much equal access to investing, and women are 50-50 in this deal. They really are. I think women need to take more of a proactive step in controlling their financial future and investing for themselves. And you just represent that. And sorry to bestow that upon you, but you do have somewhat of a responsibility to help those folks who come to you and resonate with your message. So pretty cool stuff. I don't know how the heck you do a daily upload schedule. I struggle enough with 3 or 4 videos a week, and I spend pretty good amount of time. This gig, as we approach 10,000 subscribers, it's been pretty cool learning the back door of Google or YouTube, because when you start this thing, it's not like they give you a playbook and say, here you go, do this and you'll be successful. I know there's a lot of videos on YouTube that that are aimed at helping a lot of people, but a lot of it is garbage. A lot of it is misleading. It doesn't help you at all. A lot of it you just got to figure out on your own. And I don't know if Lydia can give me a thumbs up on that. I don't know if she would agree, if she understands everything about it, but I found it to be very challenging. I've got John. I work for a map company that's owned by a set of car companies, and we do work with a lot of car companies. I don't understand people's love for Tesla. They're not the only player in the game. That's a really cool comment. I've got John kind of giving a perspective a little bit on Tesla, and that's a really, really good point. The idea behind Tesla being out front and so far out front and getting a head start on this game really speaks to why a lot of people are interested in investing in the company. But you can't think for a second that all the other major car companies out there aren't nipping at their heels. They're not going to be the dominant player, and they're not going to have this much of a head start on electric vehicles. I think we can all agree that the focus on reducing carbon footprint is a big deal, right? I talked about that a little bit on my MPC video. You guys know I took a position in Marathon Petroleum this week. I talked about this a little bit, how the global perspective, reducing carbon footprint, et cetera, very important. I think the same idea and model can be applied to what Tesla's trying to do. And in theory, how can you not agree with that? It's just really, really a cool thing. The technology that they've come out with, to be able to, provide transportation just on an electric basis is amazing. It really is. But I do agree with you, man. They're gonna need some support. They're not going to be able to fend off the competition that inevitably will come, and I think it really will affect their ability to have. They don't even have a competitive advantage. They have the advantage right now. So appreciate that. Tesla yet to go international fully. That's interesting way. I don't follow Tesla. I follow it from a distance. I am interested in what the stock is doing from day to day anyway. We'll see. We'll see. I know they need to start making a little bit more money than the little bit of profit that they make, but it is actually intriguing to know that the stock is actually making some profit right here. So kind of cool. I do want to kind of mention some of the fallen angels in the portfolio. I mean, I've offered some of the good ones, some of the balance in the portfolio that I've got right here, but I want to make sure that I'm getting to all of this discussion, and I'm going to scroll back up. Just an awesome group. I thank you guys for spending just a little bit of time getting a little bit of a financial discussion about what's going on, what you guys are doing, what you've seen in the stock market. Very important to talk about and see what's going on and see how people are, adjusting or what moves they're making in the stock market right now, because it's tricky. At least it's dumbfounding me. So if you guys have got the answer, I'd love to hear it, because this particular stint we're in right now is a little bit tough to deal with. I've taken a pretty good haircut on my technology sector. So I'm a little bit raw right now. So I exercise my right to hold when I'm mad. I'm just kidding. No, I'm just kidding. But yeah, it's been a little bit disheartening watching the market over the last month and a half or so. So I haven't done a whole lot. I do have, so Lydia makes one quick comment to Cashman. Oh, you guys are responding with each other. Appreciate that. That's cool. Bill Williams right below it. Any thoughts on Alibaba, JD.com, etc., since Trump is talking of possible trade in works? I think both of those are standalone buys, irregardless of what the administration does. I really do. I think they're both fantastic companies. I own them both. Alibaba, 30 share position. JD.com right now, I'm currently sitting on a 100 share position, setting a nice base here in the low 20s. I think both of those businesses are awesome. I think JD.com is actually the Amazon of China, and I'm not misspeaking. Actually, it typically gets bestowed upon Alibaba. But Ryan Scribner did a very, very good, thorough review of JD.com, and it's somewhat misconstrued that Alibaba is actually the Chinese Amazon, whereas Alibaba is actually more like eBay, actually. But I own them both. I own China Mobile. So you guys remember China Mobile was one of my fallen angels. China Mobile is actually clawing its way and should be above 50 again here shortly. And I've been raking in the 5.5% dividend this whole time that I've owned the stock. I'm happy to own it. Why has it done that? It's because it's part of a sector that's come into favor, you know? So folks are looking at a company like CHL, looking at how, you know, light it is on its valuation. I believe it's trading at way less than 10 times earnings. I wouldn't be surprised if it was 6 or 7 times next year's earnings. China Mobile is an absolute money-making machine. Now, they have a pretty poor stewardship over their dividend, which is kind of irritating when owning Chinese companies. You don't have quite as much control as you think you do, okay? The Chinese government does, all right? So they'll pay you when they want to pay you, all right? You're just going to have to live with that. You can take it up with China if you'd like to enter into the stocks. But I own all 3 of them. I think Chinese stocks right here are a buy, to be honest with you. I think there might be a little bit of gamesmanship going on right here with the trade war. Honestly, our stock market has not suffered that much, which is actually very encouraging. The Chinese stock market has suffered greatly. Okay, so we do have the leverage right now. I'm not saying that can't change. I'm not saying it's a game that I want to continue to play with. It's playing with fire. It can backfire on us big time, and then the leverage will change in that, you know, we'll have to come to the negotiating table, but that time is not right now. It sure has affected a lot of those Chinese stocks, man. They've really taken a leg down, and I just use this as a buying opportunity, especially in JD.com. It's JD.com right here in the low 20s. You guys could probably get some pretty good exposure to a very, very good, very, very big company. I think JD.com over the next year, over the next couple of years, take a position in the low 20s. I think you're going to see that stock north of 40. It's going to be one of the stocks that you're going to look at in the 20s, and you're going to be like, wow, what the hell was I thinking? Why didn't I buy that stock here? JD.com is probably going to be one of those stocks. So 100 shares is what I've got. I do recommend taking a look at it for sure. It's a good one. So thank you for that question, Bill. I really appreciate it. I've got Juicebox. That's a pretty cool name. I like it. How do you feel about waiting? Like being a waiter? I've never been a waiter before. I don't know if I would enjoy working for tips, but that's actually what I'm doing now, is working for tips. I've actually been tipped $4.99 tonight, so I'd be pretty stoked. That's more than a free coffee at Starbucks, so I'm pretty stoked on that, thanks to my good friend 1979 Wood. Now, I just don't understand your question. How do you feel about waiting to? Yeah, you got me on that, Scooter. I apologize for that, Juicebox. I'm with you. I'm pretty sharp, but I'm not with that one. So just rephrase your question, man. I'll hit you up. Or if you're a guy or a gal, I'm sorry. I need to stay gender neutral on YouTube. Sorry. I don't want them to kick me off YouTube. So my bet is on Disney. Disney's a win. I couldn't agree more. Lydia's at the bottom here. She's got a comment, I guess. Oh man, I just had a bunch of questions come in all at the same time. I have no idea why it does that on YouTube. I need to tell them how crappy that is. But I will. I jumped right down to Officer Towers' question, who's a good friend of mine through the channel. I'd love to meet you someday, actually, in the kind of the same line of work that I do, law enforcement. So good stuff. Officer Towers says, "Hey Ryan, which stock do you think will redeem itself first, Nvidia or Faceplant?" Oh man, alive. Facebook, I think. You know, both of those businesses, unfortunately, I don't think they have such a wide moat NVIDIA is attached to a business that cyclically is downturning right now, whereas Facebook is the dominant player in social media. I don't know if you consider their product offering a moat of sort. I don't. But when you have 2 billion daily active users, I think that's kind of a big deal. I don't think that's anything to scoff at. If you were ever interested in taking a position in social media, you know, everybody's talking about buying Twitter. I do have a Twitter account. I think I don't like it. That's just my opinion. I would never buy it. I use Facebook as a product, and I invest in the stock because I believe in it. But I don't invest in the stock because I use Facebook and I enjoy the product. I invest in Facebook because of all the companies needing to be on Facebook and advertise, and you know, they gain that ad revenue through Facebook. It's just a wonderful way of making money. But I think Facebook is good here. I don't follow NVIDIA. I do own Intel as a chip company. If I was going to buy some technology right here, I'd look at putting some money into Cisco Systems. You know, a company that nobody talks about anymore is Oracle. Oracle's a buy. And why not look at good old IBM? I don't know if I would ignore IBM for very much longer, guys. You might be regretting not picking up some IBM if you do have the means to do so. I know it's not trading cheap right now, but IBM doesn't deserve to trade cheap. It doesn't. It's got some amazing money-making businesses. They're on the cusp of some very, very interesting businesses. I think IBM is attractive here. I own 50 shares of IBM as well, so pretty important there. I know I don't own the stock. It's Chinese stock. I have Jeanette for life. The TSP stock symbols: VTX, S fund, SPY, C fund, and EFA is the I fund. I don't know if they have ticker symbols or not. You might have me there, but the C fund is their S&P 500. I don't want to assimilate it with SPY, which is basically another S&P 500 offering. I think SPY is offered through BlackRock, if I'm not mistaken. I just did a video on this, and I forgot whether or not it was State Street or BlackRock that offers SPY. But I don't know if they actually have ticker symbols. Participating in the TSP is a little bit different game. I am actually offering my video this week on military investors. So for you guys that aren't part of the military, I do apologize, but you guys know I need to deliver that niche to folks that participate in the government-sponsored TSP. You're welcome to tune into the channel and, you know, enjoy it if you can. But I am going to offer that this week. The video is already shot. It's already done. I do need to edit it up and throw it on there. So please look for that. But my percentages I'll give you now, since you've tuned into the deal. My TSP allocation is 70% in the C fund. I have 20% in the S fund. And then I have the remaining 10% in the international exposure. So that just lets you know I own those three funds. I dollar cost average them, and I don't touch them. They're on autopilot. They're my passive pillar. I do in that pillar everything that I preach to new investors as to what they should do exclusively when they start, honestly. And then in my self-directed account, I'm a little more hands-on with that portfolio as I'm trying to grow that wealth more mechanically than organically, I guess, for a lack of better terms, but I'm mechanically trying to accumulate wealth in that account. So lock in 7.7% yield on BTI. Good stuff. Appreciate that. I'm going to jot that down and actually look at it after the live feed. Pretty cool. Thank you, Kev. Appreciate the offering, man. Good stuff. Hey, financial investor, do I pay a fee if I buy VOO on Fidelity Roth IRA account? That's for you, Brent. Take it away. No, you're always on the hook to pay the expense ratio. Brent will tell you the same thing. So Brent says I'm full in the C fund. That's another way of doing it. That's a prudent way of doing it. Honestly, it's the best fund they have. It's the flagship fund. I don't know why I invest in the small caps other than, it's a low expense index fund. Same thing with the international exposure. I don't hold any international exposure in my other portfolio or my other accounts. I should, but I don't. So that's kind of where I get some of my international exposure. I've told you guys that I'm about 6% of my total overall holdings international, and I should probably have a little bit more in there, but I don't. I've got 6% right now, which is just a few $1,000. So that's what I've got. Man, alive! All these questions jumped in here at the end, man. I'm gonna focus on questions. I'm gonna start at the bottom. David Mathis, I have 80% 20-20 split with most in the S&P financial investors, so I'm glad to be following your advice as a new investor. Awesome. Thank you, Brent. I appreciate that. I appreciate the help on that. I could take the risk, but so far I have 20 shares of Facebook and 10 shares of Alibaba in a Roth IRA. I don't know about the $7 commission fee. Now you're good. Hold those stocks. ETFs up to 10,000. Great advice. That's just a rule of thumb. You could go way past $10,000 with your passive approach until you felt comfortable, to start dabbling in some single stock exposure, honestly, or you could just stay the course and stay passive your entire life. I deploy a little bit different strategy in that I try to do a little bit of all of the pillars in a portfolio, both passive, bond exposure, cash exposure, growth, dividend, and income. I try to do it all. That's kind of my approach. Should I buy single stocks on Vanguard or keep it in just ETFs? So Larry's talking to you there. I'm going to kind of scroll up and see if I can't get ahead of this conversation. I can't believe they all jumped in there at the same time. Verizon hit all-time new highs today. I know, it was so nice. I've got somebody calling me Chief. That's awesome. Well, I don't get enough of that during the day. That's awesome. Andrew James in the house says, Chief, do you feel individual stocks will be a better buy than ETFs in 2019? I do. I do. That does not preclude somebody from entering into a passive approach. What I mean by that is, if you're just starting out in the stock market, I'm addressing Andrew James, very good question. If you're just starting out in the stock market, and if I was 20, okay, I would love to hear this advice, okay? And the advice is this: enter into the stock market passively to start. If you're young, you have all the time in the world, okay? And all too often, I find that if I give the endorsement or I say, yep, single stocks are going to do better, it's going to be a stock picker's market in 2019, I believe that to be true. I do. But I will say this: if you have $0 invested all the way up to $10,000, or you're somewhere along that range, let's say you've saved up $1,000 and you're looking to get involved in the stock market, enter into the stock market passively. Start yourself that Roth IRA account. Get those dollars contributed in there. Get used to dollar cost averaging that fund up. Build it up over time. You don't even have to do it monthly. Let a little bit build up in there before you make your stock purchase, because you may be subject to some fees unless you go with M1, like a lot of people in the community do. A lot of people go with M1 Finance, but honestly, I wouldn't try to outthink the game. It just kind of depends on your age and risk tolerance as well that you didn't tell me. But I'm trying to kind of bridge that answer to you because it's a very, very good question. And I would say just be kind of cautious. Don't try to outsmart the stock market, okay? Because if you own the entire index, you're gonna own it all. You're gonna own all the appreciation. If the stock market does end up continuing to go up in 2019, you're gonna win. If it does end up going down, you're also going to win because you're going to be diversified. And when you own single stock, you are not diversified, okay? Nothing bothers me more than people who throw 5 stocks at me and they're like, am I diversified, Ryan? Like Jim Cramer, he does, am I diversified? You're not diversified if you own single stock, okay? You're not. It's impossible, all right? You're diversified if you own the entire S&P 500. That's diversification, all right? Very good question. Thank you for that. Awesome. Scrolling through, guys. So yeah, Gwendolyn got back to me. That's very cool. I'm on Facebook with you. Awesome. I've been kind of off the group a little bit this week. I've been super, super busy, so I will kick in. I am my tax accountant. That's awesome. Very cool to have you in the group. That's awesome. Very cool. I mean, smoking dope in a bathroom stall and overheating someone at the sink. That's awesome. Thank you for that, Alan. Very cool comment. I appreciate that. I appreciate the contribution to the group. There's Ernest. So I don't know if it was typically a backdoor Roth that I was referring to. It was something else. It was tax protection for wealthier folks, and I don't have the term with me. But Ernest is talking about the back door, and the back door could really work for you. And if you're a tax accountant, obviously you're up on that with finding that sweet spot of taking your benefit up front, and then kind of finding that midpoint along your life when you can actually filter those back into a Roth again. But that's a really, really good idea. So he says backdoor Roth. That's my man. Thank you, Ernest, for that. I really appreciate that. That could be the answer for you, certainly, where you take the benefit up front and reduce that taxable income, only to take and roll that into a Roth IRA account at some point in your life to continue tax protecting on that larger amount going forward. That could be a very viable option and definitely worth a discussion. Good stuff. Really appreciate that. I will go an hour and a half tonight, guys. Last time I went 2 hours. Took me 2 days to get my voice back, but no, I'm just kidding. I'm glad to do it. Some of the folks are starting to filter out of the group. So if you are in the group and you'd love to support the channel, please go ahead and hit the thumbs up button at the top. Evidently, the algorithms that own YouTube really just love that when it clicks. So, all right, I got one person to hit the thumbs up button. That's awesome. Thank you. That's two. There it is. Usually it click, click, click. Really appreciate your guys' support. And in all sincerity, I want you guys over the next month or so to keep your eyes open. Honestly, before 2019, I do anticipate hitting 10,000 subscribers. I'm humble. Never would have thought that would have happened. I do believe in the message just as much as I believe in it now, as when I started the channel and was very, very nervous. If you guys want a good laugh, go back and watch my first video, man. It's pretty cool. And I keep that stuff online to show the evolution of how much more comfortable I've got talking about a very sensitive topic that a lot of people don't like to talk about. They feel uncomfortable generating that conversation. And I thought, why not? Why not YouTube? Why not use it for what I want to use it for? I think there's a lot of misuse. I think there's a lot of abuse. But I use it as a conduit to talk to a lot of people who need to hear this information. And I still believe to this day and I get a lot of validation back that they thanked me for just providing this as an option. And I would have never known about it if somebody didn't tell me about it. And I'm glad to share the message with you guys. The ethical standards that I talk about openly on the channel, those will continue to stay in play. Past 10,000 subscribers, really the only payment that you could show to me is to share the message with people that that are interested in the stock market. Bring them into the live feed, have them throw questions my way live time. It's a cool opportunity to engage and connect with people who are looking to get really good information in the stock market. So I'm going to scroll up here and kind of make sure that I hit most of these questions if I can. If GE turns around and starts going back up, at what point are you going to take some profit? That's a good question. Well, I'm long the shares now, so I don't really have plans to sell it. But that's a good question, because if the stock does start to go up and there starts to get one iota of good information or good news that comes through about General Electric could be above $30 a share quickly. Okay. And for me, that's a quadrupler. Okay. With my money right now. It's giving me good exposure in the industrial sector. I'm actually interested in the business that I'm invested in. I mean, I'm not investing in General Electric with a hope that it's going to go up. I know it's going to go up. I know it. Based on what I'm seeing, based on the incentive that's been bestowed upon the CEO to do nothing but succeed. He's got a track record of succeeding. I think he's working with a workable situation. I don't think it's quite as bad as people lead on. I think there's some bad portions of the business, but I think they're fixable. I do. And I think they've got, a segment of their business that's actually extremely good. I mean, it's just killing it. So that's why I'm invested in the stock. And I'll evaluate the stock as it gets above, $20, $25 a share. But certainly not thinking about it right now, because I think this turnaround, unfortunately, was a little bit worse than I thought it was when I repositioned at 13. And the stock has continued down. We're just being provided this information of this rule. Oh, we're going to cut the dividend to basically nothing, things like that. So that's a really good question. Really good question. I'll do a special on General Electric when I do actually sell it. So I don't mind being transparent with my stock stuff. It's no problem. Let's see here. You guys got a heck of a conversation going on here. I'm trying to fish through it. Bought and sold Kronos twice. You guys are really into the stuff. The best IPO is actually this week. MJ Harden. That was the best IPO. But it's offered through the Canadian exchange. It's not available through the New York Stock Exchange. I think the stock ticker symbol is MJ. You guys know what M Hardin is? Because throw it in the group, because if you guys are up in Canada, that might be a buy for you guys up there if you are looking for that exposure. They sell more than any of those stocks you're throwing in the group here combined. So Lydia's representing Southern California. I'll just leave that comment to the group. If you guys want to know what she said, go in there and check it out. It's funny. That's awesome. I disagree, but it's funny. Oh, cool stuff, man. Damn, I've got 25 stocks of Kronos. Should I see them or keep them for the long term? Man, that's a really tough question, man. You guys are invested in this maybe at the wrong time. Just be really, really careful with your positions and that stuff. Just be careful. Just going to scroll through here one more time. First, smartphone mining Bitcoin. Awesome. Got Crypto Kibo in the line here. I don't know if he's a channel creator, but it's nice to see you in the line here talking about cryptocurrencies. Very cool. I'm intrigued by the topic. I appreciate you coming in the group here. Good stuff, man. Guys, I'm going to wrap it up, I think, man. I've been going an hour and a half. It's been a very successful live feed. I think I hit all the questions. Just a heck of a dialogue in here. I'm going to continue to scroll up here. JD.com earnings Monday, opened biggest 7 fresh grocery store and opening robot run restaurants soon. Wanted $21 billion for a single day. Wow, that's really cool. Ryan, do you recommend healthcare REITs? That's a good question. I really don't have an offering. Eric B hit me up, and REITs are really in favor right now. And like I said, those are the only 2 that I own personally: Simon Property Group and American Tower REIT. But I wouldn't know which one to recommend to you. That's a good question. Appreciate it. Juicebox got back to me and hit me up. Facebook needs to flip that money switch. Yeah, they do. That's a good point. I agree with that. Very, very cool. And that's it. Guys, I thank you very much for tuning in, man. We're gonna tune off. I'm gonna get on with my weekend. I want you guys to have a great weekend. I want you to have a great, great holiday. We will probably do another live feed next Friday. Why not? It will be Thanksgiving weekend, but I want to wish everyone that came into the group tonight a happy Thanksgiving this week. Spend time with your families and yours, certainly. Again, I'd like to acknowledge, the devastation out in California, man. I think certainly it's worth keeping all those folks in our thoughts. Absolutely. I've really never seen anything like it. So certainly my thoughts go out to those folks out there as entering into these holiday seasons are going to be quite difficult for those folks. But I want to thank the group for coming in. I want you guys to keep your eyes on the horizon for the 10,000 subscriber video. If you want to accelerate that process, man, and you liked the message that you've heard, honestly, the message is a simplistic one, but it's one that needs to be had. I think we need to talk about finances more. If you have friends out there who would love to resonate with a message, I don't do YouTube for a living, all right? So I basically don't have a side agenda on my channel. I offer this content because I want to, and there's really no other reason for that. In that I know the message when it goes out, that it's heard by folks to know that they can take control of their financial future. It really goes a long way, especially with the younger crowd, and knowing that this is an option out there. And I'm not saying it's for everybody, because it's not. All right. But for those folks that really do want to take control of their financial future, man, this is the channel where we discuss that very niche. So guys, thank you for that. I will leave it at that. Have a great weekend and happy Thanksgiving to everybody. I will check you guys next week. Thank you so much.